Every year, thousands of Australians claim their car for work, and a big chunk of them get it wrong. Some overclaim by counting their daily commute. Others underclaim and leave real money on the table. And a few do the math right but keep such weak records that the ATO disallows the lot. By the end of this video, you will know exactly which kilometres you can claim, which method gives you the biggest legitimate deduction, and the records you need, so an audit letter is a non-event. Let us walk through it. Here is the headline number. Under the ATO cents per kilometre method for the 2025-26 income year, you claim 88 cents per work-related kilometre up to a maximum of 5,000 kilometres per car. That caps your deduction at $4,400 according to the ATO My Tax 2026 guidance. It is simple. No receipts needed for fuel or repairs, but getting the same kilometres wrong or backing a bigger logbook claim with thin records drops you straight into the ATO data matching audit zone. The stakes are real. If the ATO disallows a claim, they can recover the tax shortfall plus interest and penalties. So before you touch your return, get the basics right. Step 1. Before you claim a single dollar, get crystal clear on what a work-related kilometre actually is. The ATO defines it as a kilometre travelled in your car in the course of earning assessable income. Go to the ATO My Tax 2026 Work-Related Car Expenses Instructions and the expenses for a car you own or lease page. These spell out exactly what counts. The key principle: the expense must be directly related to earning your income, you must have paid for it yourself, and you must have a record to prove it. Read those 2 pages first. It takes 10 minutes and it is the foundation for everything that follows. Step 2. And this is where most people slip up. Driving from home to your regular workplace is private travel. It is not deductible, even if you specifically need the car, even if you carry your laptop or normal work bag. The ATO is firm on this. What you can claim is travel between 2 places of employment where neither is home, driving to a work conference, or meeting that is not at your usual office, travelling from your normal workplace to a different site and back, regularly driving between multiple work sites during the day, and carrying bulky tools or equipment that genuinely cannot be stored at work. List your typical week and mark every trip type as either deductible or private. If you count your commute as work travel, that is one of the fastest ways to trigger an ATO query. Step 3. Now choose your method and choose it on the numbers, not on what feels easy. The cents per kilometre method gives you 88 cents per work kilometre up to 5,000 kilometres, a maximum of $4,400 per the ATO 2025-26 rate. No fuel receipts needed, but you must show how you calculated your kilometres with a diary or trip records. The logbook method lets you claim your business use percentage of all actual running costs: fuel, rego, insurance, servicing, loan interest, and depreciation. If you drive a lot for work, the logbook usually wins. Take a sales rep driving 14,000 work kilometres a year with running costs around $13,000 and 58% business use. Cents per kilometre caps are at $4,400. The logbook could give her roughly $7,500. Run both before you decide. Let us put a number on the choice. In that sales rep example, claiming the safe cents per kilometre cap gives $4,400. But a properly kept logbook showing 58% business use against $13,000 of running costs gives about $7,579. That is roughly $3,179 more in deductions every single year. On a 32.5% marginal rate, that is about $1,000 less tax annually. Over 20 years, that is more than $60,000 in lost deductions and over $20,000 in extra tax paid. The easy method is not free. It can quietly cost you a 5-figure sum across a career. So, step 4. If the logbook method wins for you, build a compliant logbook. The ATO requires you to record every business and private trip for 12 continuous weeks. You log the date, the odometer start and finish, the kilometres, and the purpose of each trip. From that, you calculate your business use percentage, work kilometres divided by total kilometres. The good news: a completed logbook can be used for up to 5 years, as long as your pattern of car use does not change substantially. The easiest way to do this is the free My Deductions tool inside the official ATO app. It timestamps your trips and exports straight into your return. Start it today because you cannot create a valid 12-week logbook retrospectively. Step 5. Lock down your records. The ATO states that if your total work-related deductions exceed $300, you must have written evidence. For the logbook method, that means keeping receipts for fuel, registration, insurance, servicing, and your depreciation records, not just the logbook itself. Scan or photograph everything and store it digitally so it is instantly available. This is the difference between a confident claim and a disaster. If you claim $7,500 but cannot produce a valid logbook and the receipts, the ATO can disallow the difference and revert you to the cents-per-kilometre default of $4,400. Then add interest and penalties on top. Good records turn an audit into a 5-minute email. Remember this threshold. Once your total work-related deductions cross $300, the ATO requires written evidence to back them up per the MyTax 2026 rules. Car claims almost always blow past that on their own. So treat the $300 line as the moment record keeping stops being optional and becomes mandatory. Before we recap, here are the mistakes that get people pulled up. Mistake 1. Estimating your kilometres from memory or your calendar. The ATO wants actual records, not a guess. Mistake 2. Counting your home to office commute as work travel. That is private, and it is a classic audit trigger. Mistake 3. Blindly defaulting to cents-per-kilometre because it feels safe when you drive enough for a logbook to legitimately pay you thousands more. And mistake 4, the worst of all, attempting the logbook method but keeping a patchy logbook with missing receipts. That gives you a big claim with nothing behind it, and the ATO can strip it back to the $4,400 default plus penalties. Avoid these 4 and you're in a strong position. Let us run the checklist. 1. Read the ATO work-related car expenses rules before you claim anything. 2. Exclude your ordinary home-to-workplace commute. 3. Compare cents per kilometre against the logbook method on real numbers, not on convenience. 4. Keep a compliant 12-week logbook using the free ATO My Deductions app. And 5. Save every receipt for fuel, rego, insurance, and servicing once your deductions pass $300. Do these 5 and you claim the maximum you are entitled to with nothing to fear from a review. That is the whole system. Get your definitions right, pick the method that actually pays, and back it with real records. If this helped, subscribe so you do not miss the rest of our Australian tax series. Next up, we are breaking down working from home deductions and the fixed rate versus actual cost method, another area the ATO is watching closely. Hit subscribe, and we will see you in the next one.